Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. It's very interesting to see a lot of countries gearing up for elections. We are in the midst of campaigning by prospects not just in India but also abroad in a year known as the year of democracy, as record number of countries go into election. But coming back to financial markets, it's the CPI day as inflation figures from both US and India will be released today. Morning, JK, how are the markets positioned ahead of the inflation numbers? Your thoughts on the markets?
Yeah, good morning, Swaraj. Yeah, speaking of elections, yeah, definitely when you have elections in various countries, uh, what happens is those particular countries will lose the correlation with the general trend of the global markets, possibly because of the domestic changes, uncertainties, etc. Also, the policy changes. That's very likely even in India as we go ahead. We could take more influence from what kind of political setup that will come about, and also the policy changes that can be expected. But if it's a different thing if there is an election in the US, because an election in the US can have an influence, or the outcome can have an influence on almost all the economies globally. So that is something that everybody will tend to follow. So that's a feature of elections on the markets. Yes, there are important numbers today, but yesterday was definitely a very quiet day in terms of the economic events, and that actually led to markets being very quiet. And the headline inflation of US is something that the market is looking forward to, and because the core inflation is expected to be either same or not, somewhat lower, because crude prices have gone up. The gasoline prices increase can have an influence on the headline number, but even said, including core number, the numbers are above 3% expected, and that is not something that Fed is comfortable with. That is what they are expressing, that they need more confidence on inflation moving towards their target. So even if market sees the number coming as per expectations, I don't think it will have much of an influence on the outcome of a Fed meeting due next week. Although last week's labor data, which in details showed that the job market is on the weakening side, can influence the Fed statement next week. But broadly, going by what the Fed members have been saying off late, there can be a slight change in the dot plot, perhaps indicating 2 cuts this year rather than 3 cuts, but that's still a matter of speculation, and it depends on how the Fed views the Fed members view the inflation trajectory going forward. So, in the absence of data yesterday, we hardly had any movement in the stocks, bonds, or their currencies. So most of them were consolidating and waiting for the important number that was expected. The CPI number last month actually rattled the markets, coming higher than expected. Therefore, markets are now having moved quite a bit in the last few days, particularly in the gold equity market that has made strong gains, and even the dollar that has weakened post the jobs data. Will be cautious about upside surprise in the inflation number. Therefore, the markets have been cautiously quiet until the numbers are actually released. Of course, there is some focus on the yen, as the market seems to be, along with the officials, divided over the policy change will be seen in March or in April. It is definitely not an easy call, because the wage negotiations that are going on are expected to come out with quite a high number of wage conclusion. At the same time, some members feel that Japan is still having the threat of deflation. So this keeps the markets on its tender hooks, and there is no clear trend in the yen suddenly in the last 24 hours, consolidating in a very narrow range. Perhaps we will have to wait for actual outcome of the wage negotiations and then the BOJ meeting on outcome on 19th. That is the focus, other than the US CPI number. Of course, in India, we did see typical reversal in the USDINR yesterday, as if it a new 6-month high, and most market participants had tended to look for further gains. That's exactly the time central banks stepped in quite aggressively, something that has not been seen for some days now, and pushed the rate up to 82.77 from 82.65, and a clear indication to the market that they are not favoring rupee strengthening too far too fast. Quite expectedly, there was short covering that added to the up move in the dollar, but the real flows are actually been quite positive, with FIF inflows surging to nearly 4 billion during the month of March in just 10 days. And with all the talk about stock valuations in India, FII has actually poured in nearly 3 billion to equities in this month alone. And the total flows for the calendar year has hit 7 billion USD, while the financial year basis, the flows are at 38 billion. This is the highest ever in any financial year. Of course, Indian markets will also be glued to the CPI report due today from India for February. Expectations of it cooling to around 5.02 from 5.10% in January. Will be interesting to watch if it can reach the 5% mark on the downside. But being well above the target of 4%, we do not see any of this changing the rate cut prospects from RBI, which is most likely not before the third week of this year at the earliest. Of course, strong flows are still expected, as we have been included in the global bond indices, and that is the guiding factor for rupee. Despite RBI intervention, market will keep looking to sell on higher levels. More appreciation in the rupee cannot be ruled out, but it will be calibrated because of RBI intervention, which comes intermittently. And as we are seeing a trend of weakening dollar abroad and rate cut prospects in the Fed, by the Fed, firming up in June, more gains for the rupee is a matter of time, although it can be very slow. So a breach of 82.65 on a technical basis can pave the way for 82.45 to 50. Thank you.
Thank you, JK. And it was quite day yesterday with of any new data. Headline inflation from the US is something markets will look forward to. Now, prices of oil has gone up, so we can see some upticks in the headline numbers. But Fed members continue to maintain cautious stance when it comes to the expected inflation trajectory. Japan's policy is also in limelight, as we covered earlier. Labor market negotiations are ongoing, and it will be crucial for the policy narrative. This is something we'll keep on following. So, as and when it evolves, we'll keep you updated. And in India, of course, USD/INR display, as JK mentioned, USD/INR displayed a typical reversal pattern, and central banks stepped in quite aggressively as USD/INR fell to a 6-month low. But on the positive front, the flows have been very strong. Calendar year wise, it has been at 7 billion, and financial year wise, it's the highest ever flow. So a break of 82.65, as JK mentioned, can lead to a further appreciation in rupee. That's it from us today. Thanks for listening. Tune in tomorrow as we bring to you the latest in the financial markets and also updates on the CPI.